In today's weekend update, we are going to be taking a look at slightly bigger timeframes, right? Mostly paying attention to daily charts and talking about what each indice has done over the last few weeks and what we were paying attention to just to make sure we're on track and what could be coming for the next few weeks going forward. When we have seen some type of waterfall selling, it's good to assess how that has really affected the macro side of things, and we're really going to pay attention to that today as we get into some technical analysis for the SPY, Qs, IWM, and DIA, and we might pop over and look at some other stuff, but we are going to put a big focus on those indices and figure out if this market can head higher into 2025 or if we are going to experience a crash right away. So let's get into it. Now, you're probably hearing a bunch of people talk about the fact that we are, going to crash right now. You've probably heard that a lot over the last year or so, but we have paid attention to the important points where the signals actually say that is a possibility, and we've gotten rid of those signals every single time. So it's good we are paying attention to both directions. And right now we are at a time in 2025 where a crash is, I think, high potential. But like we said, for the past few weeks, for the past couple of months, I think what we're going to be paying attention to is actually January of 2025, March of 2025, and October of 2025, because these things can take a lot of time to play out. They want to squeeze the market as tight as possible before giving it some kind of big drop. And we experienced a big drop last week. So what was going on around this point here of December 18th? What was going on here? Well, obviously Jerome Powell was talking, but for the most part, we seemed like we were kind of tapped out on bigger time frames or on shorter time frames. And so we were kind of consolidating, looking like, hey, that's great. We're moving sideways, and we could see that break to the upside to potentially go to a monthly expected move. And that was fantastic. But we said, watch for a clean break in either direction, because whichever way this goes, it is coiling up and ready for a big move. We were able to point that out with the 2-hour actually crossing down right here from this point forward. There was no reason for a bullish trade, right? According to your 2-hour chart, that was saying, hey, the most likely thing is to break this. And we even drew this up in one of our thumbnails, and we drew it up while we were talking about it in our show and just said, hey, we're going to do something like this, get real tight. And then the scenario we said to get bullish was we do this, see some kind of pull and go up. But the bearish one was simply we see a bounce here and then it flushes. And that's exactly what ended up happening. So one of the scenarios we were paying attention to actually did play out. Now, after this moment, going back to the daily scale, a lot of people were worried that this was going to keep crashing, keep crashing, keep crashing. And I just said, I don't think this is a good enough reason. Yeah, we are breaking through the channel, but we're at that monthly expected move. So at least some kind of bounce can come. Now we're at the point for the SPY where it has to decide if it's going to go down or if it's going to go up. Now, we can read into what has happened in these areas. And notice when we broke that channel, after a couple of days, we're right back in it. So we're able to buy back into the channel. That's very, very important. And you'll notice even on Friday, that looked pretty ugly, but we're still in the channel at this point. So the key thing we need to understand going forward is this channel has been very good. And when you have touched the bottom of it and you're able to remain in it, you end up going to the top of that channel. So what we can pay attention to is the fact that we're holding up into it. And if this just goes above these type of levels, right, we're going to give you new weekly expected moves for the SPY on Sunday. So make sure you're subscribed. But if we're able to cross up here, what is the most likely thing? Well, the most likely thing is you are going to make your way even up towards something like 627. Now, this is where breadth and things like that, we are going to get into the other indices to show how they are a little bit different and how we might just be seeing a surge of the Mag 7 or big stocks that can really hold the market up and make it go higher to make it look like it is very, very strong. But really, you don't want the market being held up by just a few stocks. You really don't want that, because if any of those stocks go through trouble, everything goes through trouble. So something I did want to point out on the weekly scale is, yes, we did get this cross down. But there's a couple of reasons that this is not the best cross down. And next we're going to talk about the Qs, which is one of those reasons, right? We like things to happen at the same time. It doesn't always happen at the same time, but we notice here that this bar is crossing over this MACD. We can plainly see that that is crossed. We can plainly see that the rejection from going into overbought territory here. But I just want to point out this bar because you are technically closing above that 9-week moving average, right? The way that this is a great confirmation is if it crosses while you have a negative bar below the 9-day moving or the 9-week moving average in this case. So something to point out here is just the fact that this is not the best confirmation, which actually can fake a lot of people out, and you might need more reasons to believe this is breaking down. I want you to imagine for a second that this was a red bar closing below the last one. Yes, it would still be an inside trading bar, but you would be getting a definitive weekly close outside of the channel below the 9. That is when I would be more worried. So does this bar worry me right now? Hey, it means it's an inside trading, right? It seems like an inside trading bar for the weekly chart. And we're going to have to see what happens next week to figure out, are we going to cleanly break below those lows and cleanly by the end of the week see a red bar here? Or are we just going to see this buy back up and see a green bar telling us, hey, you are likely to go to the top of that channel? And that's where next week we will be updating monthly expected moves as well. So if you want those monthly expected moves for every stock we cover, join the Patreon. It's a great time to do so. A lot of people were taken off guard by this drop, but if we were paying attention to signals, were we really taken off guard by this? Because we have a monthly expected move. Yes, this weekly expected move did not include this. I think it was outside of the weekly expected move, but we'll just use this monthly real quick because we like our monthly expected moves, and that's a 68% zone, and we were outside of it towards the end of the month here. Now, we still have the opportunity to still close outside of it. We do. We have the opportunity to maybe consolidate even further so that we are ending up closing inside of those ranges. But for the most part, we want to talk about what happened during this flush, and did the signals overall tell you there was weakness? Well, you'll notice there was this little blip in here that said, hey, there's going to be weakness here. Oh, it buys one more time. The Qs are very good at doing that, right? But we notice the upward price action. We notice the downward, slight downward move here for the MACD. We notice the downward move here for the RSI. And that's a big deal, right? That's not even. That is down in the slightest way. And that's why we pay attention to these little signals like this, especially when things are getting kind of out of gas. Now, what happened was that actually confirmed way up here on a green bar, but these bars in here, this one right here should have told you, hey, that is a red bar. It is a negative bar below the 9 on the 2 hour, and therefore that is going to potentially warn you that some selling can come in. That selling ended up being dramatic, but the signals did catch it, and we were paying attention to it. And look at it. It's just like those NVIDIA plays that have played out 100% of the time, right? We've done 4 or 5 NVIDIA plays over the last 5 months, and every single month we've seen a trade setup like this one for the Qs on NVIDIA, and it's played out every time. So this is what we were paying attention to for weakness. We see that actually confirming down right here, and we notice the flushing comes just after that. So this should not have taken us by surprise. Now, to look at the daily chart, I just wanted to show this red channel that we're in right now. You can see that channel. I'm just marking the same levels as the SPY and really connecting these points. So if we break that channel, that's going to be a problem. Have we even come close to breaking that channel? Yes, we have. We have come very close to breaking that channel, but we able to see those buyers step in. So that's a big deal. Where do we run up to? We run up to the monthly expected move again, and we see that resistance coming in. This is why I put out a Patreon video on Thursday during market hours saying, hey guys, this is the place where we can run into a lot of problems. We even mentioned this over the weekend, that this is where I'm really going to be paying attention to some sellers to step in the market. This could be some kind of ABC pattern. We break that channel, we retest that channel, we could start heading down dramatically. But have we really broken this channel yet? No, we have not. We have seen buyers step in to keep us in the channel, and all that has to happen is this daily can curl up into positive territory, and we might make an upward move all the way up to the top side of that channel. That's why it's going to be important to join us later on this week when we do put out monthly expected moves, because wouldn't you like to see this signal again before a waterfall of selling comes in? Well, if that happens in January, you're most likely going to see the exact same thing from one of these, the Qs, maybe even the SPY. We'll see what happens, but if this daily can curl up, it'd be a good thing. And this is where we wanted to add to the SPY, right? Is the weekly crossing for the SPY really a horrible, horrible thing right now? Can we fully read into it? Well, the Qs aren't really showing as much weakness, right? We notice the Qs are not crossing over, and the Qs are the one that I really want to cross over to see that weakness, because it has a very significant divergence there for your MACD and for your RSI at the same time. And the funny thing about this move on the weekly, if we do go through something bad in January, is the last time we went through went into that potential bear market, you notice you had about 1, 2, I would say 3, 4 points, and then you fell. All right, what do we have now? If we go over to this area, you have 1, 2, 3, oh no, this might be the fourth point. So if we're going in a similar sequence here, then this would suggest that when this crosses, it's not necessarily going to be a good thing. So something we might want to see over the next few days is a divergence on the SPY and maybe a divergence here for the Qs pretty quick going into January of 2025. Does that mean there's going to be strength across the board for small caps and the Dow Jones and everything? Is there just going to be strength across the board? Well, this is where you have to pay attention to the difference in the indices. And the difference here is, well, we had the divergence here. So this is what we were paying attention to. And I was like mentioning it multiple times. I thought it was interesting. I still thought the IWM and DIA were going to be able to hold up better than this. So I did not put money behind some kind of long or short position here. But this did tell us the signals, and we did point it out. We said, hey, these are upward moves. You do have actually a divergence on IWM, and that played out, and that led to the weekly actually crossing down. Now, that is crossing down as of last week, and look how clean of a break is. Do we see that for the SPY and the Qs? And the answer is no. So the real question here is this going to be able to get some kind of retest over the next couple of weeks and then just fail and allow the SPY and the Qs to make those divergences at the top? That's something I'm really paying attention to. We will see if this weekly is able to turn back up. If you want IWM to start going back into these crazy upward moves, right? This 5-day just gap, gap, gap. If you really want that to happen again, you got to be able to get back in that channel. That is way less likely now that you have confirmed on the weekly scale. You could just be flagging out. You can get a retest, but if that curls up, where is it? Negative territory. So you're very likely to make a lower high at some point for IWM, which leads us more into that thinking of, hey, potentially only a few stocks are going to continue the run higher, while other stocks could see weakness early on and maybe give us that little bit of hint. Or it looks like they are going to recover, and then we see those divergences from the SPY and the Qs, and that might be where we need to be paying attention for weakness. So that's something I wanted to point out with the IWM. The fact that this is much weaker than the SPY and the Qs right now, which kind of adds some validity to maybe we are going to see the Mag 7 pump over the next month or so. The thing about DIA is it's already shown the same signal. Now, we were talking a little bit differently from DIA, and notice it is different from IWM. It actually looks like it's attempting to take back that channel there that we have, and we don't necessarily have the divergence on the MACD. We didn't necessarily have that divergence on the RSI. It's just very, very flat there. So this was more selling than you would expect from these type of signals. The daily is down into negative territory, but you notice it is trying to get back in that channel. So I want to look at the weekly chart and I want to go, okay, that is crossing down. That is bad. I do have a flat divergence at the top, maybe a little bit up actually. So no real divergence at the top. We have a pretty damn significant one here on the RSI. But this doesn't mean that DIA can't see some kind of run, because we don't necessarily have the perfect signals here. But I want you to pay attention to this bar, because this is really, really important. You're holding the 20, you have closed below the 9, you have broken the channel, but what is this bar overall? It is positive. So is this the perfect bar to say, oh yes, this is very, very highly probable to pop down? No, in this case, it is just like a little bit probable, because you don't have the exact bar you need to see. Now, if we make some kind of upward move into this channel, you see that resistance again, and we actually close negative here, that's where I would be more on guard for the DIA to head down. Just real quick, this is saying that the DIA has weakness here, but we are in a very bullish market where the daily has been pretty damn beat up and hasn't crossed up in a long time for the DIA. So I want to be aware that if this really wanted to fall down, we probably would have created some type of structure to head down for a longer period of time. We didn't create that. We saw the flush at this moment. So we do experience times where a Head and Shoulders needs to actually buy back up and make that right shoulder now. So something we will be paying attention to for the DIA is a lower high in January. And then the only thing we have to pay attention to, if any kind of bearishness comes in 2025, we're still going to pay attention to the downside moves. And we're going to see, do we get daily divergences? Do we get 2-hour divergences that suggest a bottom in some way? Because we need to be open to this extending to March of 2025. We need to be open to it extending all the way to October of 2025, in my opinion, just the way that this is shaping up in the market. That doesn't mean that these signals can't lead to bigger selling. It's just if we see reversal signals, we have to be ready to react. I think they do have the opportunity to, if they want, just cause a correction early on in 2025, and then we actually see markets head higher into October, and that's something we're going to be looking for over the next couple of months. Something very key that you have to understand about volatility is the fact that we're closing below the 200 again, right? The rejection from the 200, we're crossing over on the MACD. Now, is this like the best bar in the world? Well, you're seeing a huge wick here, which is a pretty good inclination that we most likely are treating this crossing very seriously. We're closing below the 200, and we're probably going to end up down towards 1212, right? That's something we've said ever since these big moves here, and we saw that move that really scared everyone. I just said watch till the end of the week, and if we close really far down, if we close below this trend line again right here in blue, well, then we're most likely going to see this thing squeeze and head towards 1212. Now, we're still open to both sides, but that looked like the most likely scenario to me. So right now, you don't have the best bar, right? This is still a positive bar in some way, but that wick coming in really does help you out. The crossing of the MACD in some way does help you out. It's just not the most probable thing to say, oh yeah, we're going to head to 1212 right now. There still could be more work to be done here, but we'll see how this shapes up next week. The thing that we are overall looking for, just so you are aware, is a moment in time like this. Now, I did just want to take the point where we first hit 1212 and take the point where we actually broke out, and that would be right here, and that took like 2 months. So that means to us we could have maybe 1, maybe 2, maybe even 3 months where we're actually seeing this price action go like this, get little reactions of volatility, right? And then we get down by the center line and we start to create those divergences down here. Now, I do think you have the potential for that to come in right away with the first tap down, because you can create a very simple divergence by coming down like this and curling up into positive territory, right? Coming down like this and curling up into positive territory would be a very significant divergence here for your MACD. We'll see how it shapes up on the RSI, but anywhere around 1212, we're seeing divergences confirm and they look like they're about to go positive. That's where we want to pay attention, because notice back here, we actually went past 1212. We got a reaction, rejected from the 200. We turned back down to 1212. We get a reaction to set the first divergence point, and then we see another reaction down here, which actually got you close to the center line. And when that reacted, that's when the volatility came in. So we want to see a divergence really close to that center line, and it could pop up in early January. So we'll be watching. And I think the real problem that we're running into is the bond market is fighting inflation. We're at a weird moment in time where really we have cut by, I think it's like what, we've cut by 75, 100 basis points. We've cut by a ton, but the yields have gone higher. And this is because of the inflation readings. But do I think the bond market should be truly fighting inflation right now? The way the jobs data is looking right now, the way the unemployment is slowly ticking up, eventually that's going to tick up not as slow. It's going to start to pick up pretty good. And you'll see the daily divergence here for the 10-year yield. Now, this has not played out yet. This shows that maybe this crosses down. This actually adds some validity to an emergency cut from the Fed coming very soon. Now, I just wanted to point that out, but the reason that this is so bad is because overall, the bond market is tightening up. It is really saying like, hey, this economy needs to slow down. We got to fight inflation. We got to fight inflation. We got to fight inflation at a point where you don't really want the economy to slow down. And that's kind of the stuck between a rock and a hard place. Do you fight inflation or do you try to save unemployment? And it's just a scenario where there's no way to win. There really is no way to win. And actually a reaction like this will probably end up causing more damage over time than really helping people out. But it does mean to us we can pay attention to, hey, maybe the housing market can give us some type of hint, because they probably do not like that. And you'll notice that the housing market is absolutely collapsing right now. So you have the housing sector here is what I like to look at. You can go look at home builders and things like that, but giving the double top divergence up in these levels, pretty much. And then we just see, oh no, we broke the lows, and that is flushing. They do not like those yields heading higher. They could see a moment where, oh, the yields are dropping. Yay, we like that, right? The initial reaction to a big cut can actually be a decent thing. And then you see it when it actually sets in, oh, we're cutting because things are really sick. That's where the housing market can really suffer. So we're paying attention to this for those key reasons. But you could see some kind of snapback reaction if those yields start to drop. And then watch out as we retest some kind of breakdown area for the housing sector, for home builders. So that's just a few things we're paying attention to. As we pop over into the dollar, you're going to see a very similar signal. Now, what would this suggest initially? The dollar is very important. I'm glad that you watched all the way to the end. Thank you so much. I hope at this point you're thinking about subscribing, and maybe you're even thinking, hey, I want to learn how to look at stocks this way. Well, you can look at the course down in the description. We're doing our New Year, New Me sale, right? Our Christmas and New Year's sale, where we give the best price, and we're going to keep this sale every single year. We are going to do this. So people who are new to trading or have been trading for a long time, we can help out retail traders by teaching you how to use these indicators and how to actually trade using weekly expected moves and indicators like these. So what we're paying attention to is daily divergence again. Now, the cool thing about the dollar and the 10-year yield is they have been moving in tandem. Now, we are most likely going to see a separation of that if we actually get an emergency cut or anything like that. We more so don't want to be trying to guess for an emergency cut. We just want to look at signals and say, it kind of looks like if the yields really scream higher, then that's going to put so much pressure on everything that we could cause an absolute collapse of our economy. So most likely that's not going to happen. Most likely we will see an emergency cut to try to stimulate the economy in some way. But the dollar here is showing a daily signal, and that's saying, hey, the daily might curl down and even go into a negative trend for a little bit. But we want to pay attention if that actually is short-lived and is able to hold up better. If that is short-lived and is able to hold up better, if this curls down and actually curls back up, because the opposite side to this signal, that would suggest right now that people are going to go out of cash and potentially into assets. Awesome. That's fantastic. Cool. That's great. But what's the bigger thing we're paying attention to? The monthly. This is the signal we have to be watching. I really think we're going to get rid of this signal by next week, because if you confirm this up, it is suggesting, yeah, you can get a little reaction, but that is suggesting that the dollar is positive in positive territory. Every single time that happened, you're seeing a market top. Right here was a market top. Notice the dollar bottom first. We called the bottom down here. Notice that the dollar bottom first, giving that signal, and then once it went positive, this was the actual top in the market. That happened back here in 2020. That happened back in 2018 with that or 2016 to 2018, somewhere in there with the rate cuts. So we're paying attention to now, because the dollar is actually saying, I want to cross up now, and I'm already in positive territory. So this is going to be a major, major problem going forward, because that monthly signal is actually suggesting that people are about to go back into cash and out of assets for months. Okay, for months. Notice that right around this area was when the market topped on January 3rd-ish of 2022. And what did we go through? That bear market. And look what happened to the dollar. It scaled up. So if you are going to see the dollar actually turn up on a monthly chart here, you most likely are going to see something like 2022. And just to remind you of 2022, that was when we got this bear market in here that really pulled back all the way down to a monthly 50. So that would suggest to us, if we're going to see a similar thing, then that means that markets could pull all the way down to a monthly 50. And if we just measure that out from where we're at now with a potential pattern here just going all the way down to here, that would suggest that by this point right here, maybe even by the end of next year, we're actually going into some kind of 23% correction. So that's what we'll pay attention to for now. If that starts to get more dramatic, you might not be getting a correction. You might be getting a crash. So the truth is, with the main takeaway, there's a lot that can happen, and we probably need to see a little bit more price action. Is this a wick up to actually head to the top of the channel, or is this going to be some kind of ABC, and this is a dead cat bounce? And I think a lot of people believe right now that this is a dead cat bounce. So we'll pay attention to the options market to see how people are positioning themselves going forward, and we'll check on those, because the CPC coming out at 0.89 means that people are still a little bit towards the bear side, right? A little bit, not too much, but a little bit. So we could see a moment where we actually come down and save this thing back if we want to trick people. We're going to talk about the 2-hour divergence. That is still possible to see an overall strong bottom, and we're going to update you with weekly expected moves on Sunday, so make sure you're subscribed. But there's a lot of ways this can play out, and that's why it's important to pay attention to the shorter time frames. The shorter time frames are overall what I trade, but I look at the macro side to see what the state of the market really is. And the dollar suggesting with a daily divergence would tell me that most likely people are going to go out of cash. The question is, are they going to be going into the bond market, or are they going to go into more riskier assets? So that's going to be the big thing we have to figure out over the next few weeks. but it does tell us with this big drop, it gives us a hint of something that could be to come, and most likely that will continue when you do see these signals start to pop up on the daily scale. So thank you guys so much for watching today. I really do appreciate it. Thank you guys for liking, subscribing. You guys are fantastic. We are almost to 10K, so if you want to sub, if you want to give this channel a try and stick around for a little bit, we do go live every single morning throughout the week for market open, and I would love to have you there. You can ask questions, you can ask me about the course as that is on a sale, and we can overall just have some fun and chit chat while we look at stocks. So thank you guys so much for watching. I hope you have a fantastic weekend, and I will see you guys later. Peace out.